CBS 46 News presents Public Affairs on Peach.
Good morning, everybody. Welcome to Public Affairs on Peach. I'm Bobby Capel. It may be hard to believe, but it is already December, and a lot of people are thinking about their finances. Well, so are we here at Peachtree TV, which is precisely why we asked I call him a doctor because he's a doctor of finance, Andrew Paulos from Paulos Accounting and Consulting. He's a CPA in reality. Let's begin our discussion by talking about the incoming Trump administration and some of the proposed taxes. First of all, welcome. Thanks for being
Bobby.
here.
Always good to see you.
Great to have you here. It's already starting, myself included. Everybody's looking into their taxes for the past year, trying to deal with whatever that could come their way. So I want to start with the political side of things. We have him here for the whole half hour so we can get it deep into the tax code, all right? And we'll answer your questions. Donald Trump coming in, one of the big things he ran on was tax cuts.
Of course.
Barack Obama had some tax changes when they had the big budget deal a few years back. That has kind of gone into effect and was supposed to kind of stay in effect for several years. This could change things now once Donald Trump is sworn in. What are some of the big changes folks out there and the general public can look to when it comes to a tax code change in Donald Trump's presidency?
Yeah, I'm expecting, Bobby, that we're going to see some significant changes, of course. Different administration, Republican administration versus a Democratic administration. Based on what President-elect Trump ran on, he's got to make some changes to taxes to appeal to his base and his constituents, which is the American people. I'm expecting to see some significant changes with small business taxes and definitely individual tax rates for middle class.
Let's drill down on those. Let's start with small business. So are you talking if you're a small business owner, what are the taxes you're already paying?
If you're a small business owner, it depends. This can get very, very tricky. And of course, our politicians throw out, we'll make it better, we'll make it simpler. But the reality is it's a tax system. It has to appeal to everyone, to the mass population. If you're a small business owner right now, you could be paying, depends on how you're taxed. If you're a pass-through entity, and what we refer to as pass-through entities is the S corporations, which are very obviously well-known and popular, partnerships. Those types of entities basically are getting taxed at the owner's personal tax bracket, depending on what that individual's making. Profit.
That's what they get taxed.
That's what they get taxed on. So that could be anywhere from, for example, 15% on the low end, upwards to 40%.
Right.
And so therefore, that's where I'm looking for to see what kind of changes will we have. Mr. Trump has proposed, obviously, reducing the corporate tax rate.
What does that mean for folks out there?
The corporate tax rate, the reduction, corporations, your multinationals, your big corporations, right? Your Cokes, your IBMs, your
Delta.
UPS.
Okay.
All those companies get taxed at some pretty high rates, upwards to the tune of 35%. Now, President-elect has said that he wants to reduce the tax rate down from 35 to 15. Will it get that low? We'll have to see. I'm expecting probably some happy medium, maybe in the mid-20s, which is still a dramatic change and a great reduction. But that's for what we call C corporations, where the taxes stay at the corporate level. The big effect is small business owners and guys like myself, for example, and my clients who are pass-through entities who get taxed at our individual tax bracket.
So how would that change under a Trump administration?
Well, and that's the catch, is there's not been any defining line at this point as to what he's going to do. Will the pass-through entities be affected or will they not? There's two ways this can work. If they reduce the taxes for at the corporate rate, at the corporate level, that means C corporations will get a reduction.
The Deltas and the Cokes of the
Correct,
world.
the Deltas and the Cokes of the world.
Now what about small
business owners could be affected. It may not be for pass-through entities. However, if they reduce the individual tax brackets, then they're also getting the benefit
like everybody
there.
else.
Exactly.
Okay.
So it just really depends on how they're
going
to do it.
That they not only, it sounds like he's going to try and reduce the individual tax rates. That's what he ran on. He's got the Republican Congress with him on that. Will they try and also do, at the same time, reduce the pass-through rate, which wouldn't be pass-through anymore, I guess, at an even more significant discount? Does that make sense?
Business? Correct. I follow what you're asking, but I don't see, in order for the pass-through rates to change, it has to be at the individual level. So if we are the owners of our business...
They'd have to blow up the tax code to
correct.
Totally
and I don't see, although it's a Republican Congress, look, the way it works is this. The president has to appeal and work for everyone. Our congressmen and congresswomen that go to Congress, basically to go out to Washington, are there to work for their constituents. what a congressman in Alabama may want for his constituents may not be what, you know, a congressman in Georgia wants for his constituents. So they all have to play ball together at some point, but it comes down to what I call the NIMBY system. Not in my backyard. No one wants it in their backyard, because if it doesn't apply and it doesn't appeal to their constituents, they don't want to be the bad guy that passed legislation that doesn't appeal to their people. So it's going to be, although there's a Republican Congress, I'm not getting too excited just yet, because there's a lot of moving variables with taxes, and then we also have to have the aspect of we have to have something that the Democrats get in exchange as well.
Talk about the earned income tax credit. It was talked about a lot during the campaign. What is it?
Okay, the earned income tax credit, and I suspect that we're going to see some significant changes there. The earned income tax credit is where a family or an individual gets a credit, effectively a refund. That means they're actually getting money on their tax return for being on the lower spectrum of the income bracket, right? So if, for example,
if I earn under a certain amount of money,
and you have children,
and I have children,
you might get a credit, $4,000. You might get a $8,000 credit, depending on how many children. The reason this is now come into focus, and during the campaign on the trail, it was mentioned significantly, and I suspect we'll see some change, is because it is probably the single biggest tax fraud area in the tax code, and the biggest problem for the IRS. The earned income credit, you know, when we did the segment back in March, where we had the spokesman from the IRS on tax identity theft, people are out there claiming other people's socials, selling their kids' socials off for money. Someone else is claiming dependents that don't qualify, that may not be theirs, or even if they are. It's a system where effectively someone that's on the lower end is getting some benefits, but people are abusing the system, and that's where the challenges come in. So I suspect that we are going to see changes, and possibly one of the ways that we might see the changes, if President-elect Trump gets rid of what he's proposing to get rid of the head of household filing, effectively.
What would that do?
That would basically mean that a single parent with a child no longer gets to claim the head of household. That would go away. So effectively, in some shape or form, I see that would have an impact on me.
Would the income level on the child tax credit change at all? Is that something you've heard?
Possibly. Possibly. There's
a threshold, just for folks out there who don't know. If you make over, and I don't know what it is, $50,000 or something like that, you don't get the child tax credit.
Yeah, it starts phasing out as you move up in income, right? And it depends if you're single parent with children, how many children. If you're a family, the phase out could be different. But effectively, you could see, I've seen returns, not that I prepared, because I usually don't touch earned income credit type of returns. They're just highly scrutinized by the IRS, and I don't have mostly that kind of clientele. But I've seen returns where a family making $30,000 with 2 or 3 children is actually getting $10,000 or $12,000 back of earned income credit. That's a lot of money. And I'm not saying that family doesn't need it, but the problem is not the good people, it's all the bad people that are abusing the system with that.
All right, let's turn to the complete other end of the spectrum, which is the top end. And I want to talk about the carried interest provision, which Donald Trump has railed against, and actually said he's going to increase taxes on. This is a lot of times, well, at least it's couched that it's for Wall Street bankers. What is that? I know I keep asking this, but no one knows the tax code in America.
Yeah,
that's why you have a job, right?
Carried interest applies to your Wall Street bankers. It effectively deals with all the brokerage firms on Wall Street who are making money.
So it's not going to apply to any individual investor who makes an investment in a stock, sells out, pays the capital gains taxes. Has nothing to do with that.
Correct. If you're just buying and selling stocks, the average person who buys and sells stocks, basically, if they lose money, they get the write-off. If they make money, they're going to pay capital gains. If you're an individual trader, let's just say you or I are trading, and we're trading on margin, what we call margin interest. That's going to be different, basically. We're trading on house money. They're charging us interest by the day. We still get that write-off on our tax returns, basically, as an itemized deduction, effectively. So all this stuff comes into play, but it's dealing with Wall Street traders, it's dealing with big companies, it's not dealing with the average person. So whether that changes or not, that's not going to affect the normal
citizen in America. Okay, great. We are just getting started here on Public Affairs on Peach. More tax talk when we come back.